Thursday's market closes mostly higher, except for feeder cattle futures. Joining us with analysis, John Heinberg, Total Farm Marketing. Grains continue to try to recover here from the recent sell-off, John. And so do you think we're just correcting our oversold status, or does this thing have more legs under it?
I think it's a combination of the two. I mean, first off, the 570 area, December was an area I was kind of watching as a bounce point. We held that yesterday on Wednesday very nicely, got a good strong finish, follow through into, on today's trade. Would like to see December corn hold above $6. That would at least been kind of a little more psychological type push. So that money flow side of it from an oversold market gets us a little momentum there. We are watching some of these longer range forecasts. Things are looking pretty good right now with the weather conditions, and probably now into the middle of next week. But then we're seeing maybe some heat starting to build towards the end of July into August. So we might be bringing a little bit of weather premium back in. Plus the biggest thing too, I think that came into those grains today was the strength of that crude oil market, whether that's based off the energy report or just some good recovery off of a market there that's been extremely oversold. So that spilled over, gave the commodity sector in general just some good feelings today as we kind of saw gains, unlike the 5th of July when we saw losses across the board, we saw gains across most of the complex today.
So do you think that we have capitulated this fund selling and liquidation, or are we just taking a pause here?
It'd be nice to see if the money can flow. What's been really unique watching the funds, especially in the corn market, they've been patterning last year pretty much to a T. And last year we did kind of bottom around this window, and then they saw some buying into the first part of August. And then when the crop got verified or wherever we were, then the market started to kind of slide sideways to lower again. So we'll see if that pattern kind of holds. They've taken a lot of room out. Now, the big part that we got to continue to watch is what happens with that speculator money flow, especially because of the recession fears, what's going on with the economy. Right now, the commodity sector, we got pretty beaten up at the end of June and obviously the first part of July here. Is that going to be the pattern? And this is just kind of the head fake per se. So we'll have to kind of watch how that plays out. Obviously those global headlines are things that are we can't control. A lot of this move in the last couple of weeks has been more technically driven, money flow driven than fundamentally driven. Nothing's really changed there. In fact, I would say things are still undervalued here overall. So we'll have to see what the next couple of weeks gives us. If we start seeing some things break some technical barriers to the upside, then we could probably see some more money move in and at least build some value back in this window.
And as you say, the market has taken a big setback here, and really we don't have much weather premium in here if this thing does stay hot and dry, right?
Correct. And, that was probably some of the biggest push in the soybean market besides that pop in crude and bean oil today. When we start thinking about when beans are made, we're talking August in that window. So if we carry some heat and dryness into that time frame, that could come into play in the soybean crop. Plus, we still don't have a clear picture on the soybean acres. And when the USDA will release that survey or that resurvey and, on that August report, that'll give us a little better picture. But if those numbers don't change and we lose some production at 88 million, what we're currently sitting at, that's just not going to be enough beans to get the balance sheet where it needs to be, especially given the demand that's on the books for next fall.
So, John, we didn't really trade the acreage and stocks report. So you think we're actually going to trade this report this time and the tight ending stocks we're likely to see on beans?
Again, it's going to come down to that acre number down the road, but I think if the market is concerned, I think right now they're still figuring it's going to be 90 million or less, which, we kind of need that number in there. We're not probably going to see a 2-3-4 million acre shift in terms of off the report that we got in June. So the market's going to definitely have to take that into account. We'd like to see a little bit more demand kick in here. That's kind of quieted down recently, so that's a little bit concerning. There was talk that China washed on some cargoes of U.S. beans, because obviously they're pretty high priced with this price break. Doesn't mean they're not going to pick them back up again, but those are things that just get the market concerned. Plus at the same time too, keep an eye on what's going on in South America. That's been a factor in the corn market here. They got a record crop coming in, and even with the dry weather, those producers have been pumping that corn into their markets, their cash markets, and that just weighs on that price between U.S. and competing grains in the export front. So we may have to still get through a little bit more of that window, and then maybe we'll have a little more optimism, that, hey, the U.S. market is where the grain is, and people need to step in and be demanding that U.S. grain.
Wheat market has also suffered from pretty slow demand here, but we're past 50% on harvest. That's when we usually try to put in a seasonal or a harvest low. Are we doing that?
It feels like it, at least given how hard this market got sold off. It was encouraging hold $8. I don't even like saying after where we were, but it's a psychological number that's there. Again, we still got a lot of questions on where the supply is going to be in the acreage down the road. A lot of questions even globally. You got Russia talking right now, very large crop, lowering their export taxes, so that's weighing on prices as well. The market's kind of just come out with a mentality that all of a sudden we have enough wheat. After 6 weeks ago, we're getting article after article that we're going to have a wheat famine and run out of wheat globally. We did see a Reuters article this morning that Yemen was going to be basically out of wheat supplies by August and that they need to be getting into the market. And maybe that was some of the fuel today too, just basically kind of telling the world that, hey, we don't have enough supplies in the right places and this market's way undervalued given that type of situation.
Cattle market, we saw some cash trade develop. We're still seeing the north running at a big premium to the south, aren't we?
Yeah, we are. And again, we're looking at an $8-9 difference between the north and the south on the cash market. A little 137 in the southern trade today, steady, dollar lower than last week. You got northern trade pushing the 150 barrier. For reports, even numbers coming in higher than that and dress numbers there. That's a reflection of the placements here, basically going back to the end of last year. Those northern cattle are well below the 5-year average in terms of cattle getting placed in the lots, where the south has stayed pretty steady with the 5-year average. So also now we got a discrepancy in cattle numbers. And the demand is still overall fairly good, especially because of the export side. And these packers are looking for product and they're bidding up for it right now. Add in there the lower carcass weights. Carcass weights are significantly down from where we were just a handful of weeks ago. That kills the dress percentage as well. So these packers are bidding up for quality. And then with that tight supply of northern cattle, that's where that premium comes in.
August futures look like they're kind of running into a little chart resistance here.
Yeah, we got some, the technical side continues to weigh on that. Looking at the 100-day moving average, kind of a swing point in those prices. That's just sitting over top both the cattle, the feeders, and lives. We just can't seem to get through there. Now, obviously, we still got the recession concerns, the consumer demand concerns, the speculator money that pushes that market around, maybe a little afraid to push it out just in case that does come into play. The cattle market looks undervalued according to what we're seeing on the cash side again, and we got, pretty big variance there. August looks undervalued, even if we got southern trade at 137, we're a few bucks below that at this time frame.
And the hogs have taken off here, 3 straight days where we've been up and kind of defied some of these recessionary fears, but that market's got some ASF fears now reemerging, right?
Yeah, a couple things coming into play. We got a lot of talk. We got some confirmed cases in Germany. Now, how's that come into play in terms of export movement? Does that give us some business? That's why we're seeing some of the strength in the front months. We did have a really good day in cash on Wednesday, quieter today on Thursday, but that still shows me there's still some packers buying out there. And the hog numbers are tightening up a little bit, even though the weights are heavy. So production's still up there. So we'll have to keep an eye on that. Plus, we always kind of keep an eye on the Chinese prices. The Chinese hog prices have been climbing very, very quickly. That might bring some more export demand to our side as we just become a competing product and maybe more value buying U.S. pork. We'll have to watch those export numbers and see if that comes true or not. But we've definitely been bull spreading this market with kind of that front-end news definitely being supportive of those front-end contracts.
Well, thanks so much for your time, John Heidenberg with Total Farm Marketing.